Hey guys, welcome back to another video. In this video, we'll be going over the concepts of schematics and focusing on the two main types, which are called accumulation schematics and distribution schematics. If I'm honest, I don't think I would be able to get them both done in one video. So in this video, I'm going to go over accumulation schematics, and in the next video, I'll go over distribution schematics. But before we get into it, make sure to subscribe, give this video a like, and follow me on Instagram. If you haven't already, make sure to join my free Discord server. Link is in the description. So let's start off with an accumulation schematic. An accumulation schematic occurs at the bottom of a trend or a price leg, as its purpose is to send price higher. In theory, this is what an accumulation schematic should look like. At the moment, it looks quite bare, but once we start to annotate it, it will make a lot more sense at what we're looking for when we talk about an accumulation schematic. So the first thing to notice is that we have a buildup of liquidity over here in the form of equals. Now, generally, this won't always be equals. There could be trendline liquidity or any other type of liquidity, but we need some type of liquidity pool within the schematic. Next, we need a liquidity grab. This liquidity grab will grab the liquidity to the left. So generally, this is equals, but obviously, like I said before, it can be something else. Directly after the liquidity grab, there needs to be a break of structure. Now, this is very important because it has to be a bullish break of structure. So because it's an accumulation and we expect price to be sent higher after this, we expect price to grab liquidity and then immediately after break structure to the upside. So we need a bullish break of structure. Now, once we have these 3 points done, we are then looking for price to return to an order block that was left behind during the liquidity grab. And from here, we can take an entry at this point like this. Stops just below the order block with a target of at least this high here, but a continuation to the upside as well. And so in simple terms, that is the theory behind an accumulation schematic. Now that we've gone over the theory, let's go over 2 examples where we can spot this in the markets. Because when it comes to schematics in general, they may seem simple to understand, but they are very hard to spot on a chart. So here is a very nice example of an accumulation schematic. As we can see, during the London session or pre-London, we have price moving to the downside on the 5-minute time frame. And then at this point, we can see there is a buildup of liquidity. We can say that this is relative equals. Then after this engineered liquidity, price purges it. And so at this point here, we get our liquidity grab. Directly after the liquidity grab, we get a nice impulsive move that ends up breaking structure. After the break of structure, price returns to an order block left behind during the liquidity grab. And we can see price taps into it very nicely, and then price shifts away to the upside. And so taking a trade at this point would give us a relatively small stop, and we can see we can get a very nice risk reward very easily and very quickly. We can get a 1 to 5 from here as well. Another example we can see happen very recently on the 9th of May. Straight away, we can clearly see we're moving to the downside. We have engineered liquidity here in the form of equal lows, and then we get this liquidity grab just before London open in the morning. Straight after the liquidity grab, we get an impulsive move away that breaks structure. So let's just mark that out here. And then straight after that, we move down quite correctionally and we tap into an order block. You might not be able to see the order block on this time frame, but if I drop down a time frame, we have this order block here. Pull it to the right. We actually get tapped in twice to this one, and we can see price soon after moves to the upside. Now, I'm not sure if you spotted this or not, but for this example, it's actually a double accumulation. So let's go over that. So here's an accumulation here. We've pulled up, we've pulled down, but we've also had liquidity being produced over here as well. So there's a liquidity, price pulls down, liquidity grab at this point, because it's cleared all the liquidity, it pulls up, it breaks minor structure, more easily seen on the 1-minute time frame, pulls back, taps into an order block that we can have a look at on the 3-minute time frame, this one over here, and price rallies away very nicely from here to give us a nice trade, as you can see. So for example, let's go with the lower position. We would have been entered here, let's say. We have a stop just below, and again, a very nice and easy 1 to 5 plus just by using an accumulation schematic. So as you have seen, accumulation schematics can happen very often on any time frame, on any currency pair on the charts, and it's something you have to train your eye to look for. Generally, what you want to look for is number 1, a bottom of a trend or a price leg, and number 2, you want to start to see price consolidate a little bit and move sideways, which indicates it's engineering liquidity before we see a liquidity grab and then a break of structure telling us what direction price wants to move in. And in this case, it would be a liquidity grab to the downside, to then break structure to the upside, pull back to an order block, and we have an accumulation schematic play out very nicely. That's it for this video. Make sure to subscribe, give this video a like, follow me on Instagram, join my Discord, link is in the description, and I'll see you in the next video.